Yes. So I hope all of you have finished your lunch. Okay, friends. So good afternoon, everyone online. I hope you have done with your lunch now. Let's continue our PGBP. Yes. So listen. Keep quiet. Shh. Keep quiet. Friends, we were discussing about the deductions. Okay, the morning session, we were discussing about deductions. Now we'll start with the disallowances. What do you mean by disallowance? What do you mean by disallowance? Certain payments are not allowed as deduction. Certain payments, even though it is deductible from 30 to 37, when you check it, it will be in the character of a deduction, but you cannot claim it as a deduction. That is called as what? Disallowances. So we'll discuss the first disallowance. That is section, can you read the section? Section 40A1 and section 40A1A. That is disallowance for default in TDS, where the sum is payable to non-resident or outside India or resident. We are about to discuss two sections together. Number 1, 40A1. Number 2, 40A1A. We will discuss these two together. So before discussing these two, what do you mean by TDS? Before discussing these two sections, tell me what do you mean by TDS? Tax deducted at source. TDS simply means tax deducted at source. Now listen. See, in tax deduction at source, let's understand how exactly the transactions happen and what all are the impact that you have to consider. Shh, keep quiet and listen. Say for example, we will take an example, say there is a KS Academy. We'll take KS Academy as an example. Say KSA is there. And there is a person called Mr. JK. Say KS Academy is making a payment of rupees. KS Academy is making a payment of rupees, say 10 lakhs. Say JK is the auditor of KS Academy. JK is the auditor of KS Academy, and KS Academy is making a payment of how much? 10 lakh rupees to Mr. JK. Okay. When KS Academy is supposed to make the payment, then you have to deduct what? KS Academy have to deduct TDS. Say the rate of TDS is at 10%. And how much will be the TDS then? 1 lakh rupees will be the TDS. Are you all with me? Mr. JK will only get how much? 9 lakh rupees in his hands. And this 1 lakh rupee will be paid by KS Academy to the government. This KS Academy have to pay this 1 lakh rupees to the credit of central government by calling it as TDS. Are you all with me? Now, JK, when he files his return of income, how much will be his total income in his return of income? How much will be the total income of Mr. JK? That have to be shown. Say, assume that JK does not have any other income. Our assumption is JK does not have any other income. Then you tell me how much is the total income? It is 10 lakhs. Very good. It should be 10 lakh. By applying the old slab rate, do you remember the old slab rate? Up to 2,50,000 nil, basic exemption limit. Then from 2,50,000 to 5 lakh, 5%. 5 to 10, 20%. 10 above, 30%. By applying that slab rate, can you tell me how much will be the basic tax plus cess? Including cess I want. That is only basic tax. Including cess, how much will be the tax liability? So 1,17,000 will be the tax liability. The tax liability will be 1,17,000 including cess. Okay. So up to 2 nil, 2.5 to 5, 5% means 12,500. 5 to 10, 5 lakhs into 20% means 1 lakh. 1 lakh 12,500 plus 4% cess. That will be 1,17,000. From this 1,17,000, Mr. JK can claim what? TDS. Credit for TDS that you have already suffered. And Mr. JK is supposed to pay the remaining 17,000 only as the net tax payable. Are you with me? Are you with me? So this is what happens in the transaction of TDS. Now, here the Case Academy, in this transaction, Case Academy can be called as what? Deductor. Deductor. So, as you all know, it is a responsibility of the deductor to deduct the TDS and make that payment to the credit of central government. If they are not making the payment to the central government, then what will happen? You tell me. In this case, negative balance. What is negative balance? So you tell me, what will happen to KS Academy if they are not deducting the TDS correctly? Then they say for KS Academy, this 10 lakh is actually an expense. Yes or no? For KS Academy, this 10 lakh is actually an expenditure. If KS Academy is not deducting TDS correctly, then they will have to face a disallowance either under section 40A1 or under section 40A1A. Are you with me? If JK is non-resident, then disallowance will be under 40A1. If disallowance is under, if JK is resident, then disallowance will be under 40A1A. Are you with me? Are you with me? If disallowance, if payee, that means if JK is a NR, then disallowance will be under section 40A1. And if payee is a resident, then disallowance will be under section 40A1A. This is what we are about to discuss right now. So whoever makes a payment, if they have make any default, then that person is normally called as assessee in default. That means deductor, if they make any default, then the deductor is normally called as assessee in default. The assessee in default, for the assessee in default, there can be two types of disallowance. Depends upon the status of payee. Now that's what we are about to discuss. So let's discuss case number 1. Can you read case number 1? If interest, royalty, what is FTS? What do you mean by FTS? Fees for technical service. Like managerial consultancy services are called as what? FTS. What is the full form? Come on, I want all of you to respond. What is the full form? Fees for technical services. If interest, royalty, fees for technical services or other sum excluding salary payable to non-resident and TDS has not been deducted in the PY, then 100% of that expense shall be fully disallowed. Are you with me? Are you with me? Yes, if you are a person paying either interest, royalty, FTS or other sum excluding salary, because for salary there is a separate provision, okay? Salary there is a separate provision. Excluding salary, if you are making a payment to a non-resident, then TDS has not been correctly deducted. You haven't deducted TDS. Then you tell me what is the consequence? What will be the consequence? That entire payment of rupees 10 lakh in our example paid by KS Academy to non-resident JK shall be fully disallowed. KS Academy cannot claim that 10 lakh as a deduction. If they want to claim 10 lakh as a deduction, they have to correctly deduct TDS. Are you with me? One more thing is there. After deduction, they have to make that particular payment to the credit of central government. So what is that second point? After deduction, if TDS, after deduction of TDS, default in remitting payment to the central government on or before due date of filing return of income, then also 100% of the expense shall be disallowed. Are you all with me? Now listen, KS Academy correctly deducted 1 lakh. If they have deducted 1 lakh, then they have one more responsibility. What is the second responsibility? They have to make the payment. By what date? Due date of filing, return. To escape from disallowances, they have to minimum, normally TDS have to be paid by 7th of next month. Normal paying date is 7th of next month. But what department say is, if you are deducting it correctly, you have to make the payment by minimum, which day? Return filing due date. On or before return filing due date, you have to make the payment. Now, can you tell me, KS Academy being a company, what will be the due date for return filing? 31st October 2024 will be the due date of filing return for a company. For companies and those who are subjected to audit, they must file their returns on 31st October of assessment year. See, this 31st October 2024 have written based on an assumption that the PY is 23-24. Now, for a non-audit, normal person, when is the due date of filing return? Normal person, 31st July 2024 for a non-audit person. Now, if you are subjected to transfer pricing audit, there is a thing called transfer pricing audit, TP audit, 92E audit report is there. If you are subjected to transfer pricing audit, then 30th November of 2024. These are the three due dates for filing return. Are you with me? Are you with me? So the point right now I'm discussing is, if KS Academy while making payment, if they haven't deducted the TDS in correct manner, there will be a disallowance of 100%. And after deduction, if they are not making the payment to the credit of central government also, there will be a disallowance. Once deduction is done, then they have time till return filing due date to make the payment. Are you with me? Are you with me? And the funniest fact is, this is a temporary disallowance. What do you mean by temporary disallowance? This is actually a temporary disallowance. And can you tell me what is temporary disallowance? Once there is a default, there will be 100% 10 lakh shall be disallowed. Are you with me? If there is a default, that means either you haven't deducted TDS, or after deduction you haven't made the payment, there will be an entire 10 lakhs will be fully disallowed. But once in future, if you have rectified that default, rectified in a sense, in future you have deducted and correctly made the payment, you can claim that 10 lakhs in future as a deduction. So temporary disallowance simply means once there is a default, there will be disallowance. Once the default is rectified, there won't be any disallowance. In future year, you can claim that 10 lakh as a deduction. Is that point clear? Is that point clear? KL say deduct 50,000 only as TDS and out of 1 lakh, sir. Then proportionate amount. Okay. In one invoice, they have to deduct fully. Otherwise, proportionate amount will be disallowance. Due date 31st. Okay. Once TDS expenses will be allowed. Yeah. So, for that year only, or when TDS is made or allowance is disallowed. So, whenever you are defaulting, that defaulted year, there will be disallowance. When you are rectifying, in the rectifying year, you can claim it as a deduction. Okay. Yeah. So, moving on with the next one, friends. So, can you read this chart again? I want all of you to read this along with me. Interest, royalty, fees for technical services, other sum, excluding salary, payable to whom? Payable to non-resident. That means your payee should be non-resident. And number one, TDS has not been deducted in the PY. Then how much will be the disallowance? 100% of expense shall be the disallowance. And what is the second case? After deduction of TDS, default in remitting payment to central government on or before due date of filing return, 100% expense shall be disallowed. Is that point clear? Similarly, if any sum payable to a resident, any sum including salary, we can say any sum means everything that includes salary as well. If KS Academy, that means in the example, if JK is a resident and TDS has not been deducted, then how much will be the disallowance? If JK is a resident and TDS has not been deducted by KS Academy, then what will be the disallowance of KS Academy? 30% of 10 lakh shall be the disallowance. Are you with me? So, if the pay is NR, then disallowance will be 100%. If the pay is R means resident, then the disallowance will be 30% of expense. Or we can say 70% you can claim as a deduction, 30% gone. Is that clear? Is that clear? Now, how about after deduction of TDS, default in remitting payment to the central government on or before due date of filing return? Then 100% of that expense shall be disallowed. Once deduction is there and there is a default in making the payment to the credit of central government, then that entire payment shall be then also 30% shall be disallowed. Not entire, then also 30% shall be disallowed because the payee is resident here. Are you with me? So these are actually similar. Only small differences are there. First difference, payee NR in the first case, payee NR in the second case. That means payee NR in the first case means under section 40A1, and how much is disallowance? 100%. Payee resident in second case means under section 40A1A, how much is the disallowance? 30%. And in first case, excluding salary. Second case, everything, including salary. Both are temporary disallowance. What do you mean by temporary? In the second case, if once there is a default, there will be 30% disallowance. In future, if you have rectified it correctly, you can claim that 30% back as a deduction. Are you with me? In future, if you have rectified that particular default, you can claim that entire amount as a deduction. No problem. Are you all with me? Now, can you read that note? There is a note under this. Can you read that note? Where tax has been deducted in subsequent year or has been deducted in the PY but paid after due date of filing return, then such sum shall be allowed as deduction in computing income of the PY in which such tax has been paid. So, the point is, once you have rectified that default, in the year of rectification, you can claim that disallowance as a deduction. Are you with me? Is that point clear? Are you all sleeping? Okay, thank God no came. I thought everything you have predetermined answer. Yes, sir. Yes, sir. All right. So, very good. Moving on, friends. This was the disallowance for TDS. That is tax deducted at source. Being payee, being NR or resident. Moving on to the next one. Can you read the second disallowance heading? You all said you had lunch. Yes or no? If you had lunch, then you should have that energy. Are you with me? Yes, sir. Because, see, your examination is between 2 to 5. Why the examination is between 2 to 5? To make you sleep, huh? No, it's just a time. Okay, it's just a time. I mean, in recording, I cannot comment on the examination time and all. I don't know why they have put it from 2 to 5. During our times also, it was from 2 to 5. Okay. Yeah. So, sir, when CA+B.CA chapter started? After PGBP. Yes. So, listen. See, your examination time is from 2 to 5. So, this should be the time that most of the energy have to come out on this time. Are you with me? You should be more energetic in 2 to 5. Between 2 to 5, you have to be like fire. Ayyo, ennada idu. Are you all here? I understood. You understood. But you have to implement it also. Okay. Okay, Ragul. After eating feels like heaven a day. After results, it will feel like heaven. After eating, results comes in, that is a kind of an electrifying moment. When the results comes in and say congratulations, that will be a kind of an electrifying moment. You all want to enjoy that, right? Yes, sir. You all want to enjoy that. Yes, sir. For that there's a pain, and that pain is this. One of the pain is this. You have to sit and watch all the boring lectures. Okay, I know it's dry, but you don't have a choice. Yes. So we will discuss the next one. And can you read the next heading? Sir, when you complete PGBP, I mean, I have no such plans, like there is no predetermined plan for that. Today we will complete PGBP and we will start capital gains, okay? That's for sure. When question papers say, see, students sleep, sir, reduce the competition. Okay. Oh, you are talking about the time. Okay. Sir, sing one song and we will get energy. Then don't get energized. You sleep. You sleep, Shakti. I have to take revision. Now I have to sing. Then I have to dance. If I give you a chance, you tell me to go and write examination for you. Okay. So, you are making me doing a lot of things. Okay. So, listen, friends. Listen. Rangan Chetava. The mone. So, section 40, clause number A, subclause number 2. What is that? Income tax not deductible. Very simple. The income tax that you pay, can you claim it as an expenditure? No, it's your obligation. That's what departments say. The income tax, surcharge, cess, interest, etc. that you pay in relation to the IT Act is your obligation, not a deductible expenditure. Are you all with me? Indian income tax, surcharge, cess, interest under 234A, B, C, penalty, whatever that you pay in relation to the IT Act 1961, fully disallowed. You cannot claim it as an expenditure. Are you all here? Is that point clear? Now, friends, there is another interesting thing. Hope you remember. If you are making a payment that is salary to non-resident, say there is no TDS, or there is TDS, but you haven't made the payment to the central government, then I've told you it is not under 40A1. There is a separate section. Do you remember that? Say, listen, this one. Excluding salary we have written here. If you are making a payment to a non-resident and there is no TDS, or there is TDS, but after deduction you haven't made the payment. If it is salary, it is not covered under 40A1 disallowance. Why? Because you have a separate section. And let's read that particular section right now. So can you read the section number? Section 40, clause number A, subclause number 3, disallowance of salary payable. Any sum which is chargeable under the head salary, if payable outside India or to a non-resident, and if tax has not been paid thereon, nor deducted therefrom, under Chapter 17B. Chapter 17B means TDS chapter. Chapter 17B is in income tax, it is the TDS. Okay, simply it means if salary, you are making salary payment to an NR employee, either you haven't deducted the TDS, or you have deducted the TDS, but you haven't remitted the payment to the credit of central government, then how much will be the disallowance? How much will be the disallowance? Pura 100% will be the disallowance, but there is one problem. There is one difference. It is a disallowance for ever. What's disallowance for ever? Once there is a default, disallowance will come. Later on, whether you rectify or not rectify, we don't care. We will not give you deduction. Are you with me? That's why it's a permanent disallowance. Yes, that's a perfect word. It's a permanent disallowance. It is not a temporary disallowance. That's why they have kept the salary alone as a separate section. Are you with me? So if a person is paying salary to a NR, either there is a default in deducting TDS, or deducted, but there is a default in making the payment, then you tell me what will happen? That 100% of that salary paid by KS Academy shall be a disallowance forever. Is that okay? Is that okay? Superb. It will be a disallowance forever. That's why we have kept it under a separate section. Now, moving on to the next disallowance, we will complete the disallowance. So, what if PGBP income earned in outside India and I pay a tax in that income received in India. For this case also, we can't deduct foreign tax. We can't deduct foreign tax. I didn't get you, Alinavas. For foreign tax, why should you deduct TDS in India? Actually, I didn't get your question, okay? Yes. So moving on to the next one that we have already completed. You remember 40B? Yesterday we have discussed if a partnership firm is paying either interest on capital or remuneration to working partner, then there's a ceiling limit. How much is the ceiling limit for interest on capital? 12%. How much is the ceiling limit for remuneration? Depends upon the book profit. Up to 3 lakh book profit, rupees 1,50,000, or 90% up to 3 lakh, or 60% for the balance. First one, whichever is higher, and second one, 60% for the balance. Hope you remember you have solved a question also. And we have improvised the question and have make you solve the total income of partner as well. Do you remember that? Yes. Okay. No. Foreign tax you are paying, you will get a foreign tax credit here. Under section 90, 90A, 91. 3 sections are here. We call it as relief under DTAA. Come again? He asked again. Okay. Yeah. So I earn PGBP in foreign. Okay. I pay tax for that in that country. Okay. Now that income I remitted to India. Under section 5, the income is taxable. Okay. Now, then. Then what's your question? Whether I'll get a deduction for that foreign tax paid in India. That's what your question? For that case also we can't deduct foreign tax. Yes, you are asking whether that foreign tax paid, even now also I can not claim that tax. That means foreign tax. For that there is a thing called relief under section 90. It is called as bilateral relief. 90A, bilateral relief with specified association. 91, unilateral relief subjected to condition. Have you understood anything? Nothing. That's why I remain silent. It's called as double taxation avoidance agreement, will be covered under final. Don't worry, Avin. Clear inter. Then we will discuss that in final, okay? There is a chapter called DTAA, double taxation avoidance agreement, that is there in final. Okay, yes. Remuneration to partner, actual remuneration paid or remuneration. Yeah, don't worry, yes. Remuneration to partner, actual remuneration paid or remuneration as per section 40B, VEL, sir. Oh, whichever is lower. Yes. If your actual amount is more than the ceiling limit, then you will get the ceiling. Okay. If your actual amount is less than the ceiling, then actual amount. So we can say whichever is less. Are you all with me? Yeah, we have already completed 40B. So we are moving on to 40A2, 40A3, 43B, done. Okay. Let's understand what is 40A2. Can you read the heading? Section 40A, subsection 2. It is a section. 40A is the section number. A is not clause number. Are you with me? Section 40A, subsection number 2. That's how you have to read it. If instead of capital A, if you have written small a, then that's wrong. It's a blunder. Sections are case sensitive. Have you understood what I said? Instead of 40 capital A, if you have written 40 small letter a, that's actually a blunder. It's better not to write the section number. If you're not clear about a section number, don't write. Okay. And don't unnecessarily quote case laws and all. Certain students are there. Simply they bluff. KP Kulkarni versus Income Tax Department, Punjab, Haryana bench. They used to write like this, especially in final and all. Don't think that they are fools. Okay. If that case law is not a cited case law, case cited or not, it's very simple. If that case law is there in the syllabus, then only they will give you mark. Otherwise, they will simply cross it off by stating it as blunder. Institute will never tolerate blunder. And don't test their patience. Certain students, due to the frustration, they will write in a way that it is like they will write the answer in a way that they tease ICA, they tease the examiner. Don't do that. Because for examiner, it's very simple. They can simply cross off your answer. Okay, it's our requirement that to clear the exam, not there. Are you with me? And please don't write anything that discloses your religion, your name, your place, etc. Please don't write anything related to that. If you're taking an example, then place X, place Y, more than enough. Don't disclose your name, your religion, your caste, the area where you are from. Don't disclose it in paper. Are you with me? I'm not saying that if you disclose that will be a problem, but why should we take chance? We don't know. Because even though we call them as ICAI, it is actually people. Okay, different people have different opinions. Okay, so please don't take any chances. And don't write any religious symbols and all. Don't write any religious symbols like Om or cross or that Allah and all. Don't write. Why? Because we don't know who is going to value your paper. And certain students will write all of them. Because we don't know who is available at that time. Whoever is available, come and save me, okay? I don't care whether it is Jesus Christ, whether it's Shiva, whether it's Krishna, whether it's Allah. All are welcome. Give me exemption. Don't write such things in your paper. It is actually completely prohibited. There are certain do's and don'ts. And don't use 14-digit calculators. It is actually not permissible. But I don't know whether it is that strict here. 14-digit calculators are not permissible. They will restrict. And scientific calculators are also not permissible. Laptop, you go with a laptop, You go with a laptop and write the exam, okay? Yes. So, listen friends, coming back to the theory, that is section 40A2, that is excess payment made to the relatives and associates. So, we will take a simple example for that, okay? Here, what's your name? Third one? Hari. Say Hari have a company. Hari runs a company, and Hari's wife is the chief accountant. Hari's wife is the chief accountant, not cheese. Sorry, slip of tongue. Chief accountant. Yeah. Hari's wife is the chief accountant, and she's getting a salary of rupees 1 lakh. She's getting a salary of how much? Rupees 1 lakh per month. The normal accountant salary in that particular area, say only 20,000. The normal accountant salary is how much? Only 20,000. And Hari pays what? 1 lakh rupees to his wife. Are you with me? Are you with me? Hari paid 1 lakh to an accountant. Why? Because that accountant is his wife. If it is some other's wife, then what would have happened? Don't say 2 lakhs, okay? Don't say 2 lakhs. If it was some other's wife, then what would have been the salary? 20,000 only. Are you with me? So department, what they do is, department always check whether you are making an excessive payment to your relatives or associates. If you are making excessive payments to your relatives and associates, they have the right to disallow the excessive portion. It is an anti-avoidance measure. Are you with me? If department AO feels that you are making excessive payments to your relatives or associates, then what will happen? That excess portion shall be disallowed. Only that excess portion. That means 1 lakh salary paid, market value is only 20, then how much will be the disallowed? 80,000 only will be disallowed. Are you all with me? Are you all with me? Yes. Come again. For his wife, come again. Full amount. Yes. For her, it is gain for department. In her hands, she is liable to pay tax for that entire 1 lakh. Okay, she cannot deduct that 80. Disallowance is only for the payer. Recipient, full amount will be taxable. He liked that girl. He can pay 3 lakh. Is that a kind of a marriage matrimony or something? Huh? Okay. You like that girl. You like a girl, you pay 3 lakh. All right. So, listen. Okay. Come back to that particular point. Okay. Now listen. See, what is the first sentence? The assessee incurs any expenditure and pays a specified person. Then AO may disallow excessive or unreasonable portion of such payment. In examination, they will definitely give you the market salary. But one thing that you have to identify is whether that person, that payee, is your relative or associate. For that, you have to study this definition. What's the definition? Assessee and related person. And for an individual, who is related person? Relatives. Relative means spouse, brother, sister, or any lineal ascendant or descendant of that individual. Who's ascendant? Father, grandfather. Who's descendant? Son or daughter or grandson or granddaughter. Ascendant or descendant. Now, what is next? For a company, who is the relative? Directors and its relatives. Director's relative. Company does not have any relative, okay? The director and his relatives are the associates. Then, for a firm or a LLP, partners and its relative. HUF, AOP, BOI, members and its relative. And finally, what is the one? Any person or their relative as above have a substantial interest in any other person. That simply means, say, KS Academy. For KS Academy, its director will be a relative. If you make excessive payment to director, then what will happen? Excess portion shall be disallowed for the KS Academy. Are you with me? Say KS Academy's director have substantial interest in SBI. Imagine KS Academy's director have substantial interest in SBI. Are you all with me? And KS Academy is making an excessive payment to SBI. Then that also will be a disallowance under section 40A2. That is the last point. Any person or their relatives as above have substantial interest in any other person. That means either KS Academy directly have substantial interest in SBI or KS Academy's director have a substantial interest in SBI. In all the cases, they will be considered a disallowance under section 40A2. Is that point clear? Is that point clear? Now, substantial interest means 20% or more share capital if it is related to a company. If it is related to partnership firm, then 20% or more profit sharing ratio. This is how you have to value the substantial interest. Is that point clear, friends? Is that point clear? So 40A2 is all about if you are making excessive payments to your relatives or associates, that excess portion shall be disallowed under section 40A2. Moving on to the next disallowance. We have two more pending disallowance. No, not two more, sorry. 1, 2, 3, 4 more pending disallowance before we finish off. So the next is actually section, read the section, section 40A3 or 3A. That is payment exceeding 10,000. Read it again, read the heading again. Payment exceeding 10,000. Simply means, read the first sentence, while paying an expenditure covered under section 30 to 37, amount exceeds 10,000 in a single day and method of payment otherwise than by way of account pay check, account pay bank draft, ECS or prescribed electronic mode, then what is the consequence? 100% of that expenditure shall be disallowed. Are you all with me? Simple example, I have paid salary to one of my employee in a day and that amount is 30,000 and I paid that salary in cash or a cash check or a simple crossed check. Fully disallowed. Account pay cross check and simple crossing is actually different. Are you all with me? I hope you all have studied negotiable instruments. You had negotiable instruments in your old syllabus. Now only it has been removed. Oh, your May attempt was your first attempt. Okay. So you May attempt is under new syllabus for inter, right? Okay. Then fine. No problem. There are different types of crossing. Okay. Simple crossing means you put two lines. Simple crossing means what? You put two lines in the border of a check like this. Any person with that check can encash it. That's it. Are you with me? Are you with me? Any person can encash it through his account. If you put two lines and written account payee and in the pay orders you have written Mr. A, then what will happen? Only Mr. A, that through only his account he can encash that check. That is called as account payee crossed check. Are you with me? Or account pay check. Are you all here? Account to account transfer, but you have to write a person's name. Then only it will become an account pay cross check. Otherwise, any person can encash it through his account. Are you all with me? So, the point here is you have to make a payment either by account pay check or account pay bank draft or electronic clearance system or through prescribed electronic modes. Then no problem. If you are making any expenditure which is allowable as a reduction under 30 to 37 in any mode other than these four, then what will happen? 100% of that payment shall be fully disallowed. I hope it is clear. Now, there are certain notes under this. Can you read note number 1? This limit of 10,000 has been raised to 35,000 in case the payment is made to transport operator. What do you mean by this? Say your pay is a goods transporter. Your pay is what? A goods transporter. Then you can make a payment of up to 35,000 in any mode. It's according to your wish. You can make a payment of up to 35,000 rupees in any mode, provided the pay have to be a goods transporter. Are you all with me? Then, what is note number 2? Can you read note number 2? Prescribed electronic mode means debit card, credit card, net banking, IMPS, UPI, RTGS, NEFT, beam payment, Aadhaar payment. These are the prescribed electronic modes. You can make the payment through prescribed electronic modes. There is absolutely no problem. Are you all with me? So, tell me friends, if I'm making a payment otherwise than by way of either account pay check or account pay bank draft or ACS or through prescribed electronic mode, what will happen? What is the conclusion? The payment that I've made, if exceeding 10,000 in a day, then that entire payment shall be fully disallowed. Are you with me? Are you with me? Subjected to the exceptions that we are about to discuss. Are you all here? So disallowance under section 40A3 is subjected to rule 6DD. And what is that? Exceptions to section 40A3 or 3A. Very simple. If your transaction is covered under any of the things which you are about to discuss, then 40A3 not applicable. If your transaction comes under any of the things which we are about to discuss, then section 40A3 is not applicable. That's what called as exception to section 40A3. Are you all with me? What is transaction number 1? Can you read the first item under that? Payment made to RBI, LIC, bank or a cooperative bank or agricultural credit society. If the pay is any of those persons, no worries, you can make a payment according to your wish in any mode you want. Are you all here? Are you all here? If the pay is either RBI, LIC, bank or a cooperative bank or agricultural credit society, you can make the payment in any mode, any amount, no problem. 40A3 will not be applicable. What is point number 2? Payment to government. You are making a payment to government. No worries. Nothing shall be disallowed. Because government does everything for the betterment of the people in India. Whether it is state government or central government. Do you have any objection? Let me pan the camera. Okay, do you have any objection? State government of Tamil Nadu is doing everything for the betterment of what? You are not saying anything. Let me pan the camera, okay. For the betterment of people in Tamil Nadu. You don't believe. It is like that only, okay. And central government of India is doing everything for what? Let me tell you. There is a guy, they are saying some Tamil Nadu government is corruption government. They Kalai Mudinjadu. Okay. I don't know. But I think every government is doing their part, okay. Every government. We cannot say that every government is what? Central government also. Budget only for Andhra and Bihar. Not other states. Come on, I don't believe. Yeah, you guys can say anything in chat. Okay, there is no problem. I have 10 employees, 9,000 per month each. I pay salary to every employee single day, no problem. 10 employees, 9,000 per month, right? No problem, you can make the cash payment. Absolutely no problem. In one single day, one person, you are making a payment. If that exceeds 10 only, there will be a problem. Okay. Yes, 1-to-1 for an expenditure. But if a salary of an employee is 30,000, you are paying 10,000 today, 10,000 tomorrow, and 10,000 day after tomorrow, then one thing I want to tell you is assessing officer also is eating rice. If you make the payment like that, he will simply come and pull your corner. That payment should be justifiable. Okay. The payment that you are making, if it is an industry standard, then it's okay. Say for example, daily workers. You are paying daily salary. No problem. Acceptable. Yes. Moving on to the next point. Okay, Sarji, understood. What is this pen? Okay, whatever it is. Yeah. Noted. Okay. Tax, your loss is your loss and your gain is our gain. It is something like that only. Okay. Nirmalaji only said that. So it's like if you have a loss, that you have to suffer. If you have a gain, then you have to pay the taxes. Of course, everywhere it is like that. Come again? A government is a kind of a silent partner. Yes. I have no objection in that. You have to pay the taxes. No worries. Enough of discussion. Okay. Enough of discussion. In aggregate, one person. Pen represents Karunanidhi. I don't even know the spelling of Karunanidhi. Okay. Instead of saying Karunanidhi, you are showing me pen. What should I say? Yeah. So in aggregate, one person should not. Yes. Not in aggregate. In a day. In aggregate, if that exceeds 10 also, there will be problem. Otherwise, no problem. Different day, if it is an industry standard, then you can make. Yeah. Okay. Forget about Karunanidhi, Stalin, then Who's the opposition leader? Come again? Palanichami. Okay. So forget about these people. Okay. EPS. EPS. Okay. OPS, NPS, KPS. Forget about everything. Think about what? Not Udayanidhi Stalin. Okay. Think about 6DD. I think Udayanidhi Stalin is sports minister. He's an actor also, right? He's that in Mammannan, right? Okay. Why my name in between that? Oh, you want to forget about me also? Okay. All right. Now, listen. Son of Tamil Nadu CM. Son of Tamil Nadu CM is Udayanidhi Stalin. That I know. Okay, that I know. Yes. So, he is also a minister right now. Oh, sports. Your area MLA. Okay. And the Togudi other? Chepok. Oh, Namma cricket stadium. Anda Chepok. Chepok Terim. Okay. Yes. So coming back to the point. Sir, you see more. Okay, Seaman. Whatever it is. Seaman. What is Seaman? Like Shaktiman, Superman. Many movies, super. What is Seaman? Party leader. Forget about Seaman, Superman, Shaktiman. Think about 6DD, okay. Think about 6DD. I thought it is kind of a superhero, maybe like. Okay. His name is Seaman. Seaman. Okay. Yeah. So coming back to the point. Listen, you are making any payment to a government. You are making any payment to government. No problem. You can make payment in any method. What's the third one? Read. Payment made by letter of credit. That means through bank guarantees. If you are making a payment, that's actually happening through bank only. No problem, you can make a payment. Then, direct transfer through bank. Instead of this mobile phone RTGS and all, you can go directly to the bank and do the direct RTGS. No problem, covered under 6DD. Then, book adjustment in a bank. You directly go to a bank. Fill that yellow slip, white slip, green slip, whatever the slip is. You can transfer the month. Okay, you can transfer the amount. So, bill of exchange payable through a bank. That is also covered under Rule 6DD. So, can you read that again? Payment made by letter of credit, direct transfer through bank, book adjustment in a bank, bill of exchange payable through a bank. Everything is covered under 6DD. What is next? Payment made by way of book adjustment between persons. You are supposed to pay me 1 lakh. I am supposed to pay you 1 lakh. Should I give you 1 lakh and take it back? No, we can mutually cross off our liability. That is also a discharge of payment. That is also not done by way of account pay check, account pay bank draft, ECS, prescribed electronic board, no problem. If it is a mutual crossing off of liability, then it is covered under Rule 6DD. Are you with me? Are you with me? Moving on to the next point. Can you read the next point? That is actually very important out of this. Payment made to original producer for the purchase of agricultural, forest, fish, poultry, dairy, meat, livestock, hides, skin, flowers, honey products. Say for example, take fish as an example. Are you all with me? Rose slip up to 20, yellow slip up to 50. Oh my God, which bank it is? Yeah. So listen, say fish is your raw material. Fish is your raw material. You are making fish pickles or something, and fish is your raw material. Fish pickle. Okay. You don't want fish pickle, then we will make a mango pickle. And then mango will be your raw material. So we'll take fish itself. You are directly buying fish from a fisherman. You are directly buying what? Fish from a fisherman. Are you with me? When you are directly buying fish from a fisherman and you are making a payment, no problem. You can make any amount of payment in any mode. Absolutely no problem. Are you all with me? Similarly, if you are buying agricultural produce, you can directly give money to the agriculturist. No problem. Like forest produce, directly you can give money to the tribal people. Like fish, poultry, dairy, meat, livestock, hides, skin, flower products, honey products. If you are directly making payment to the original grower, producer, etc., then you can make the payment in any mode. For example, I'm buying fish from the fisherman, any mode. I'm buying fish from a shop, then what will happen? Prescribed mode I have to follow. Are you with me? Are you with me? So that's why we are saying payment to the original producer. Producer means the original person. You cannot produce fish. Oh, you are multi-talented. You can produce fish. Not possible. Nobody can produce fish. In relation to fish, it will be fisherman. Are you with me? Producer means the person takes care of that. That's it. Yeah. Now, barter system also accepted in Rule 60D? Yes. Yes. Barter system is also accepted. It's considered as a mutual crossing of liability only. Rather than payment, you are distributing goods. Perfectly fine. Then, moving on to the next one. Payment to a... What's happening? It's going, coming. One second. Yeah. Payment made to a cottage industry for the produce made without the aid of power. What do you mean by cottage industry? Kudisi Vyavasayam. Kudisai Vyavasayam. Yeah, something like that. From the regular class only they taught me this. Kudisai Vyavasayam. Kudisai Thorila, whatever it is. Kudisai Vyavasayam means agriculture, right? Okay. Kudisai Thoril. So Kudisai Thoril means you have a small shed which is nearby your home. Are you with me? And you are manufacturing products in that small shed without the aid of power. Your house may have a current connection, but you are not manufacturing anything by making use of that power. Who is drawing over there? Okay. So, listen, you are making a payment. You are buying your products from a cottage industry who are making that product without the aid of power. You can make payment in any mode. That means if the payee is a cottage industry whom are actually not using electricity to generate products or to manufacture products, you can make the payment in any mode. Are you with me? Are you with me? Moving on to the next one. Payment made and the payee's place is not served by bank. Your supplier is residing in a place where there is no banking service. No problem. You can make the payment in any mode. Now, moving on to the next one. Payment made to an employee or his hire in relation to retirement or similar benefit, provided such payment does not exceed 50,000. Say one of my employees getting retired today. I'm making a payment of 50,000. Say for example, paying gratuity or paying some provident fund or something, I'm making a payment in relation to the retirement. And how much is the amount? 50,000. No problem. I can make up to 50, not more than 50. Are you with me? Let's read that point again. Payment made to an employee or his hire in relation to retirement or similar benefit. On account of death, if the employer is paying a compensation to the legal hire, that is also covered under 60D. Up to 50,000, you can make payment in cash. It is not necessary that you have to make payment in cash. It's an option given to you. You can make the payment in bank. No problem also. Are you with me? It's always better to make the payments in bank because in future, you can avoid litigations. If you pay cash, then what will happen? That person will accept the money. After some time, if there is some kind of potty or something happening between them, then what will they do? That person will say, he didn't make me the payment, and all will happen. So it is always make the payment in bank. Through the bank will be the better when it comes to business related payments. Now, moving on to the next one. Can you read the next one? Payment of salary to an employee who is temporarily posted to any other place or in a ship for 15 days or more other than his normal place of duty, and TDS has been deducted while payment of salary. Simply means, say for example, you are one of my employee. Here, what's your name? Hari. Everybody is Hari. Okay, Hari is one of my employee in Chennai. Are you with me? Are you with me? Yes, sir. Hari is one of my employee in Chennai who is actually working with my head office in Chennai. I told him to go serve for me in Jammu and Kashmir. So I am sending him to where? Jammu and Kashmir. He have to work in J&K for 2 months. It's a temporary posting for more than 15 days. What is temporary posting? Kind of a deputation. You have to finish that project and come back. Are you with me? During the posting itself, I have mentioned that you have to be there for 2 months, 3 months, 4 months, whatever it is. So I posted him for how many months? 2 months. It is more than 15 days. He had posted an employee in any other place other than his normal place of duty. I can make the salary payment in cash. Because it will be very difficult for Hari to open a bank account in Jammu and Kashmir. Are you with me? So what I told my branch in JK to pay the salary in cash. The only one thing that you have to be careful is you have to deduct the TDS. You deduct TDS and paying cash salary, no problem. But it have to be a temporary posting. If you are posted there forever, then you have to open a bank account over there. Are you with me? Are you with me? Now what if Hari already have a bank account in Jammu and Kashmir? Then this exception is not applicable. If your employee already have a bank account in that particular place, then you have to make the payment only by way of prescribed modes. Are you all with me? So read that point again. Payment of salary to an employee who is temporarily posted to any place, any other place or ship for 15 days or more. Hello, read. Other than his normal place of duty and TDS has been deducted while payment of salary. Correctly, TDS has been deducted at the time of paying salary. In that case, department say, don't worry, you will get the protection of rule 6DD. And what is the next point? Payment to an agent who is required to make the payment in cash for the purchasing goods or services on behalf of such person. When the principal gives money to agent, no problem. The principal in his books of accounts, he can show cash payments to agent. And the agent is required to distribute that money to different people. Absolutely no problem. The principal can pay money to his agent. Are you with me? But the agent in his books of accounts have to make sure that 10,000 exceeding payment have to be only by way of prescribed modes. You can hand over money to your agent. No problem. For that, there won't be any disallowance. Are you with me? And the last point, can you read the last point? Payer in the business of money exchange and payment made for purchasing foreign currency and traveler's check. What does that mean? You are a money exchanger. Okay. The foreigner will come and definitely pay you dollar. And you have to pay him cash. Think about from the perspective of money exchanger. You are buying dollar by paying cash. Is that permissible? Yes, that's your business. You can't give an account pay check to a foreigner and tell him to open a bank account in SBI. A foreigner is coming, you don't have rupee, and he is giving you a dollar and you are giving him a account pay check and telling him to open a bank account in SBI and to encash it. It will take at least, if it is SBI, it will take at least 6 months. Okay, if some other bank, then it will take maybe 2, 3, 4 months, it will get over. But SBI at times, certain branches, very careful, yes. But right now, I think earlier it was like that. Right now, I think they are doing good. But earlier, it was like, my God, unbelievable. So, moving on to the next point, friends. 6DD. What is the speciality of 6DD? Array, what is the speciality of rule 6DD? Exceptions to section 40A3 or 40A3A. That means you can make the payment. No problem. There won't be any disallowances if you are covered under rule 6DD. I hope it is clear. Sir, if we purchase from original producer for cash, then that cash amount also not exceed 10,000. No. You are making payment to an original producer like fish, poultry, dairy, etc. You can make payment up to any amount. There won't be any disallowance. Okay. Tirisala Devi. Yes. I'm not sure whether I pronounced your name right. Devi. I hope you got my point, Devi. Yeah, moving on. Moving on to the next point, friends. What is the next point? Section 40A7. That is disallowance of provision for gratuity. Imagine. I'm starting a company today. You all are my employees. I have around 100 plus employees are there. I know that someday over the other, you all will retire. Yes or no? Yes or no? Otherwise, you have to be Indian Tata. I mean, at the age of 100 and all, you will be like fire. Okay. If you are not Indian Tata, then after the age of 60, your body will weaken. You have to retire. Are you with me? Are you with me? So, I know that someday or the other, you all will retire and I have to pay you the gratuity. And I've created a provision in my books of accounts. Provision for gratuity payment. Are you with me? If I create such a provision, that full provision shall be fully disallowed. No employer is supposed to raise a provision and claim it as a deduction. If you want to raise a provision, you do it. But we will not give you a deduction. Are you with me? Are you with me? Creating a provision for gratuity always shall be a disallowance. But listen, say instead of creating a provision, I have actually paid a gratuity payment. Say one of you retired. Okay, this Hari retired. Today he retired and I paid him gratuity. Then that gratuity that I've actually paid, I can claim it as a deduction. Actual gratuity payments are always allowed as deduction. By putting a provision, you are not supposed to claim any deduction. Are you all listening? Are you all listening or sleeping inside? Are you all listening or sleeping inside? You are not listening. Not listening. Listening but not sleeping. All right. Yeah. So, no. Listening, sir. Okay, very good. Very good, Shakti. Anda Shakti na appaditha irukku. Okay. Yes. Adu enna burning heart ah? Okay, Shakti man. Who you are? Mia. You are Shakti man. Yes. Shakti man. Is that have any other? That I know da. Shaktiman, my favorite, okay. That Shaktiman, Shaktiman, that Shaktiman, right? And our first Indian superhero. After that, Chitti Robo. And then, I think it's Ravan. These are the three. Come again? Chota Bheem. Chota Bheem, it's cartoon, right? Yeah. Yes, Krish. Yes, there is a comedy piece, Krish. Yes. All right. So, asking something, Beam. Okay. Whether it is Beam, Karna, whatever it is. Payment of salary to the employee who is not temporarily posted in a place, has already have a bank account in his name there. Is that allowed to be paid in cash? No. It have to be temporary posting. Then only you will get the protection of 6DD. Philips Tatava. Adi yaru? What about provision for tax? Provision for bad debt? Provision for bad debt disallowed. Provision for tax disallowed. Minnal Murali is there. Jackie Chana. Okay. If I ask you some answer, everybody is dead. If I ask you something like Superman or something, you will come up. Provision for tax and provision for bad debt, everything is disallowed. Okay. Yes. Now, coming back to the point, friends. Entertainment. Okay. Moye. Kalli Rani. Who is that? Kalli Rani. No. All the provisions are not disallowed. All the provisions are not disallowed because we have a thing called ICDS. ICDS 9 is there. That is provisions. If a provision meets the criteria under ICDS, you can claim it as a deduction. You don't have to study that all. Sir, whether all provisions are disallowed? No. If a provision meets criteria under ICDS 9, you can claim it as a deduction. Yes, moving on. Listen. So, if I actually pay you gratuity, that is allowed as a deduction. Or rather, I can do one more thing. I can maintain an approved gratuity fund in an institution called LIC or any other public financial institution. I can maintain an approved gratuity fund. What is the advantage of maintaining an approved gratuity fund? I can give yearly payments to the approved gratuity fund, and that gratuity fund will take care of the gratuity liability of my employee at the time of retirement, so that there won't be any liquidity issue for me. Are you with me? Thambi, is he sleeping? Thambi, Minnal Murali, inge irukano, okay? Anga minnal panna venda. All right. So the point is, listen. if you are a person actually paying gratuity to your employees, that actual payment is always allowed as a deduction. Or instead of actually paying it, you maintain an approved gratuity fund. Then the payment to an approved gratuity fund is also allowed as deduction. Instead of these two, you simply put a provision that is never allowed as a deduction. Are you with me? So actual payment of sum to approved gratuity fund subjected to 43B. That means you have to actually make the payment. Or employee on at the time of retirement, death, termination of service, etc. You are actually making the payment to the employee. These are allowed as deduction. Are you all with me? So putting provision is disallowed. Actual payment of gratuity or payment to an approved gratuity fund, both are allowed as deduction. I hope it is clear. AGF contribution at the we get deduction. Approved gratuity fund contribution, yes, you will get it as a deduction. Yes. Now, moving on to the next one. 40A9 we have already covered. What is 40A9? Any payment made by a person as an employer to any trust fund, company, AOP, BOI, etc., which is unapproved, shall not be allowed as deduction. Are you with me? Best example, any contribution to URPF. What is URPF? Unrecognized Provident Fund. You are making a contribution, never allowed as deduction. And one more thing will come under 40A9. What is that one more thing? Excess contribution over and about 10% of basic salary plus DA to a pension fund. Do you remember? I think today only we have solved a question also in that. Do you remember that? Two things are there under 40A9. One, any payment made by the employer to any unapproved funds. Number two, excess contribution to NPS. Excess means over and about 10% of basic salary plus DA. Very good. Moving on to the last item under disallowance. Thereafter, we will solve a problem. Okay. Yes. NPS 10% exceed disallowed in 40A9. Yes. Yes, Ragul. That's right. Very good. So, who is this temporary guy? He's keep on asking temporary posting. What is the problem? If he is temporarily posted and also has bank account too, sorry sir, little confused. Don't worry, Niranjani. Keep on asking, okay. If you are a person who is temporarily posted in a place and you have a bank account, then you are not covered under 60D. You have to make the salary payment through either account pay check or account pay bank draft or ECS or prescribed electronic mode. Got my point? You should not have a bank account in that place. Yes. Don't worry. Jokes apart, okay. I will say temporary guy and all. It's just a joke. That's it. All good. So, 43B is the last disallowance section that we have to discuss. After that, we have a problem. Okay. Breaker. No problem we have. It's only 3:45. Okay. So, it's very early for a break. Right now, we will solve the problem, finish PGBP, then break. After that, we'll start capital gains. And if possible, we'll try to complete capital gains. Why? Because there is a small problem. Tomorrow, I have to leave you early. Tomorrow, because I'm flying back to my hometown. So, if I take up to 6:30, I'll miss my flight. So, tomorrow, I'll be leaving you around 5:15, 5:30. In between that. Okay. So, today, we will try to come again. 1 p.m. Then I will leave you at 9 a.m. then. Then I'll leave you at 8:35 a.m. All right. So, tomorrow I'll be leaving you a little bit early. So, today I'll try to finish up capital gains also if possible. Okay. We'll rush through capital gains because capital gains is nothing. We'll rush through capital gains and I'll make you solve some questions also. Thereafter, tomorrow our main target is 115 BAC. All the things which we have learned through these 3 days, I'll flip the dosha. Tomorrow is like a flipping dosha day. Okay. So, yes. 43B, that is the last disallowance that we have to deduct. And can you read the heading? Certain deductions to be made only on actual payment basis. Very simple. See, 43B says, irrespective of, could you teach how to present in exam? Yes. I can give you an input on how to present and the tips, how to prepare, everything I can tell you, okay? That tomorrow, just before we leave, I will give you how to prepare direct tax and how to present direct tax, I can help you. Actually, there are certain methods used by me in my CA final and I think it's very effective. I still believe it is very effective. There are certain smarter ways to study direct tax, definitely I can help you. Question paper, if it is possible. I will give you September 2024 question paper. Da. Okay, let me complete it. Day after tomorrow, I will be completing September 2024 question paper. Day. He is asking from some question paper, okay. So don't worry. You can make use of, thanks sir, we get, okay. I'll give you question paper and you will get 80 plus, okay. We will pass, okay. Don't expect question paper. Mass, you believed, my God. My God, today, okay. All right. So listen. See, the following expenses are allowed as a deduction only if it's a revision for me or you are. Read. The following expenses are allowed as deduction only if payment is made on or before due date for furnishing return of income. Don't read it as ROI. It is return of income. Very simple. Irrespective of the method of accounting that you follow. The following items, if you want to claim it as a deduction, you have to actually make the payment. You have to actually make the payment. When at least on or before due date of filing your return in that respective year. Are you with me? What if you are not making the payment on or before due date of filing return? There will be a disallowance, and that disallowance will be a temporary disallowance that you can add over here. Okay, I forgot to add that point. That will be a temporary disallowance. Why temporary disallowance? What is temporary disallowance? Once you actually make the payment in the next year, you can claim these items as a deduction. Something related to the TDS. Something related to the TDS disallowance. Here, if it is disallowed in a year and you have made the payment in the next year, definitely you can claim that as a deduction in the next year. Are you with me? Now. Which is the first item covered under 43B? Can you read the first item? Read that again. Tax, duty, cess or similar fees. For example, rates and taxes in relation to a building is actually a municipal tax. If you want to claim it as a deduction, you have to actually make the payment. And can you read the second one? What is that? Employees' contribution to SPF, RPF, gratuity or other welfare fund. Employer is, if he is making his out-of-pocket contribution to either RPF or SPF or gratuity fund, you have to actually make the payment to the respective fund to claim it as a deduction. If it is payable, you cannot claim it as a deduction. We are talking about right, employer, okay, you correct the spelling. Employers. Put an R in between. It's employer's contribution, not employee. Correct it. Employer's contribution to SPF, RPF, gratuity and other welfare fund. Can you read the third one? To the employees. That we have already said. Bonus or commission is allowed as a deduction only on actual payment basis. What is item number 4? Interest on loan to scheduled bank or cooperative bank. What is item number 5? Interest on loan from deposit taking NBFC or systematically important non-deposit taking NBFC. What is point number 6? Interest on loan from public financial institution, state financial corporation or state industrial investment corporation. This 4, 5, 6 actually similar. 4, 5 and 6 is all about interest on loan. Only difference is from where you take the loan. Say for example, KS Academy took a loan from a scheduled bank or a cooperative bank. Interest on loan is allowed as a deduction under 36, but it is subjected to 43B. You have to actually make the payment. Are you all with me? Yes, sir. And point number 5, KS Academy have taken a loan from NBFC. You study it as NBFC. Okay. Then they can claim that interest as a deduction only if you actually make the interest payment. That's it. And what is point number 6? KS Academy have taken a loan from public financial institution or state financial corporation or state industrial investment corporation. You can claim the deduction only on actual payment basis. That's it. When you have to make the payment, either in the PY or at least before due date of filing your return. If you are not making the payment, 100% disallowance. And when you actually make the payment in the subsequent year, in that year, you can claim a deduction. Is that clear? Is that clear? Then what is the seventh item? Payment in nature of earned leave of employee. What is earned leave? That leave encashment. Do you remember leave encashment? For an employer, that leave encashment is actually a cost. If he wants to claim it as a deduction, you have to actually make the payment to the employee. Then only you can claim the deduction. What is point number 8? Payment made to Indian Railway for the use of railway asset. If you are planning to use railway asset, please make the payment. Because railway is under pathetic situation. Okay, you have to actually make the payment. Then only we will give you deduction. It's not passenger. It's for the goods. Passenger, even if you prepay the amount, you will not get the ticket. Yes or no? Especially in seasonal time and all, if even you prepaid, you will be in waiting list 500. It will be like that. For the goods, you will get a credit, but you have to actually make the payment to claim that transportation cost as a deduction. Are you all with me? Is that point clear till now? Now let me give you a question. Based on whatever we have discussed from yesterday, from 28 to 43b, you have to make use of it and you have to give me the answer. It's a fantastic question. So take your question sheet. Take your question sheet that I've shared with you. And question number 8. It's a fantastic question. Go through that question and give me the answer. I cannot display that question in one page because it is actually a lengthy question, okay? In that question, listen friends, they are asking you to compute the profits and gains of Mr. Shivam under presumptive taxation under 44 AD and profits and gains as per normal provisions of the Act. You compute profits and gains as per the normal provisions. Presumptive taxation, I myself will do. Are you with me? Forget about presumptive taxation. Only compute the business profits. Yes, tax, only income tax. Regular tax disallowed under 40, clause number A, subclause number 2 is income tax only, okay? Since we don't have luxury of time, the maximum time that I can give you is 10 minutes. Within that time, try to finish up the answer, okay? When you solve the answer, start from the net profit. Start from the net profit, then finish the additional adjustments. Read each and every additional adjustment, then you decide what to do to that net profit, whether to increase net profit or decrease net profit. After completing the additional adjustment, have a analysis over the P&L account in the credit side as well as the debit side. Then you decide what to do with the net profit and you will get the final taxable profit under PGVP. Are you with me? So start from the net profit and adjust everything. Oh, you already got the answer. Very good, Maunika. You also got. Yes. What's the update? I'm getting many answers from online. How about offline? Sir, under 40A3, where when a person pays salary to a non-resident defaults in paying tax, then the permanent disallowance is only for the particular transaction, right? Yes. That's only for the salary. Yes. For the next salary, when you are making payment, you correctly deduct the TDS, no problem. So when he pays the salary for the next month after paying the tax, he will be allowed for the deduction for that month only. Yes, yes. You will get a deduction for that month only. Yeah, you're right. Who's that? Chaitanya, you're right. Yes. How many of you have an answer? Please raise your hands. Okay, I can see some hands over here. No problem. So we'll do one thing. Let's solve it together. Okay, enough. So let's solve it together. So listen, it's again an institute study material question. After finishing capital gain and IFOS very small portion, I'll make you solve some passes and questions that have PGBP adjustment. Okay. So we have some study material question as well as I have some good questions where they have tested for 14 marks and all that we will solve tomorrow. So right now for the time being, let's start with Mr. Shivam. A retail trader of Kochi gives the following trading and profit and loss account for the year ended 31st March 2024. So we will start with the P&L account. So PGBP, net profit as per P&L account. Can you help me? How much is the net profit as per P&L account? How much is the net profit as per P&L account? 50,000. So friends, please keep quiet and listen. So what is the first adjustment? It was found that some stocks were omitted to be included in both opening stock and closing stock, the values of which are given. So they have omitted some opening stock. Omitted means you have to add 9,000. Yes or no? You tell me, you don't have to redraft that P&L account. First of all, don't redraft the P&L account on waste time. When you add 9,000 to the opening stock, what will happen to the profit? When you add 9,000 to the opening stock, what will happen to your profit? Your profit will be reduced. Are you with me? Because opening stock is a debit item, and when you add that opening stock, your profit will get down. Your profit will come down. Are you with me? Are you with me? The balancing figure is profit. You add 9,000, upar 9,000 will go from niche. Are you with me? So you have to deduct opening stock adjustment. How much is the omitted amount? 9,000. That you have to reduce. Then there is a omission for the closing stock. How much closing stock is omitted? 18,000. That means closing stock have to be increased 18. If you increase credit item, then your profit will go up. Are you with me? If you increase credit item, or it's just like, imagine it is just like a sale. If there is an 18,000 sale, then your profit will go up. Similarly, if there is an increase in the closing stock, your profit will go up. And how much is that closing stock omission? 18,000. So add closing stock adjustment 18,000. It is not necessary that you have to less everything in one side and add thereafter. It's not like that. You can follow the adjustment chronology, no problem. Are you with me? But always put a bracket for the deductions. Otherwise, you will go wrong when you compute the total income. For the examiner, it's okay. You will go wrong when you compute the total income. Are you all here? So actually, ICA is like not that strict when they value your answer sheets. It is normally like that. They are not that liberal too. Not that liberal too. They are just okay. There are a lot of rumors happening around in the industry that ICI will simply deduct the mark. No. They will not simply deduct the mark. That is for sure. Are you with me? Those are just rumors. That's it. Or just gossips. That's it. They will never simply deduct a mark. There will be something that you are missing. That's why they deduct your mark. Are you with me? And there is actually a thing called grace mark. They provide grace mark up to 3 to 5. They normally put grace marks to 3 to 5. Yes, there is. Yes, there is grace marks. I have seen that. Personally. I've seen that. They put grace marks normally because the mark they put inside the paper and the total mark is different. Total mark will be more rather than they put. When you take that verified, answer, verified copy of the answer keys, you can see that. In certain papers, I've seen that. That's what I'm saying. And there is actually a press conference done by one of the Central Council member who is actually a member of your examination committee also. That person have openly admitted that also. 3 to 5 marks may normally give us grace. Are you with me? So, I'm not saying that they will simply deduct the marks. Then one thing also I can tell you, no examination is 100% fair. It's a reality. No examination is 100% fair. It's a reality. Whether it is ICI, whether it is ICSI, whether it is IAS, no NEET. NEET, we have a lot of other problems. Whether it is NEET, whether it is dirty, whatever it is. NEET is dirty right now, okay? NEET has become something, yeah, something is happening, rumoring around NEET. So let it be there. So the point is, no examination is 100% fair. So what you can do is, don't give them a chance to reduce your marks. You do everything that is required to get more marks. Are you with me? Are you with me? Write every working note, write everything properly. You follow a proper manner, definitely you will get marks. Definitely you will get marks. Are you all with me? Are you all with me? Moving on to the next point, friends. So, where were we? Salary includes 10,000 paid to its brother, which is unreasonable to the extent of 2,000. What is this unreasonable to the extent of 2,000? There will be a disallowance under section 40A2, excessive payments to brother. Are you with me? So here brother is your relative and you have made 2,000 excessive. So what to do? That 2,000 have to be added back. That entire 10,000 has been deducted. So you need to add back 2,000 to the net profit. Are you with me? So disallowance under section 40A2. Under section 40A2. In exams you have to write it in full, okay? You have to write disallowance rupees 2,000 which is paid to brother under section 40A2. This is, while I solve, since I'm so lazy, I will not write it in full. But in exams, you have to write it in full. So 2,000, you have to add back. Then what's next? While the whole amount of printing and stationery was paid in cash in one-time payment. Is that a problem? Printing and stationery 23,200 paid in cash. Is that a problem? Yes. 40A3 will come into the picture. If you're making a payment over and above 10,000 in a single day to a person otherwise than by way of prescribed method, then what will happen? You tell me. That entire payment that you've made shall be a disallowance. So 23,200 have to be disallowed under section 40A3. So 23,200 you have to add back. Then what's next? Depreciation provided in the P&L account is 1,05,000 based on the following information. So there is depreciation provided in the books of accounts, that is 1,05,000. That is based on the following information. Opening balance of plant and machinery is how much? 4,20,000. That is the written down value as on 31st March 2023 minus depreciation for the PY 22-23. It is 4,20,000. That is the opening WDV. So we'll write a working note for the depreciation. Okay. So opening WDV is how much? 4,20,000. 23 or 20? 20. 4,20,000 is the opening WDV. Now, a new plant falling under the same block of depreciation was bought on 1/7/2023 for 70,000. So you bought another new plant. So there is an addition, which is more than 180 days, not less than, more than 180 days. And how much is the addition? 70,000 is the addition. So total will be 4,90,000. Now how much is the sales value? Sales value is how much? Sales value, 2 old plant and machineries were sold and the value is 50,000. So you have to delete that. Now you tell me, do you have to compute capital gain here? Do you have to compute capital gain? No. Why no? Because the sale value does not exceed the block value. Are you with me? The sale value here, it is not exceeding the block value. Hence you don't have to compute the capital gain. You can simply write 4,40,000 and you can charge depreciation on that 4,40,000 at what rate? 15% rate. Because the addition also is more than 180. So how much is 15% of 4,40,000? 66,000. Now let me ask you one doubt. Can you claim additional depreciation? Can you claim additional depreciation? Answer is no. Why? He's a trader, not a manufacturer. So no ways he cannot claim any, no ways he can't claim any additional depreciation. Tell me he cannot claim any additional depreciation and the value will be 66,000. But what is the depreciation that you have charged in the P&L account? What is the depreciation that you have charged in the P&L? 1,05,000. So how much is excess? You have claimed 1,05,000 in P&L Actual depreciation is only 66,000. Is the actual depreciation. How much is excess? 39,000 is excess. You tell me what to do with the excess. Add back that excess. You have to add back that depreciation excess. So excess depreciation. Yeah. So where were we? Excess depreciation is how much? 39,000. You have to add back. Are you all with me? Now what is next? What is next? It is rent and rate includes GST liability 3,400 paid on 7/4/2024. Tell me, are they claiming input tax credit? Come again? Okay, their sales turnover is more than 20 lakhs, but they can do business without taking GST, right? They have to legally, but there can be a case where they, without GST also, they can do the business illegally. Okay, not mentioned. So what to do? Not mentioned. That I know. Okay, what to do? See, there is no need of any assumption. They are not taking input tax credit. Why? Because the GST amount came as a part of the P&L. The GST is actually routed through the P&L. If GST is getting routed through the P&L, that means they might have GST registration. But for that particular commodity, they are not taking any input tax credit because there are goods where you cannot claim input tax credit. Just like a car and all. If you are in the business of driving school or something, you can take, otherwise not. Hope you know GST law. Okay, yeah. So the point here, what we have to assume is, there is no assumption because they have routed that GST through the P&L account. And that simply means they are not claiming input tax credit. If they are claiming input tax credit, then the GST paid will become an asset, current asset. They will not route it through P&L account. Yes or no? If GST you are taking, input tax credit, it will become your current asset. If you are not taking GST, if not taking input tax credit, then the GST paid will be an expenditure. It will come under the debit side of the P&L. Here, they are putting it under rates and taxes. Where is rates and taxes? There are some rates and taxes. Yeah, rates and taxes, they are putting it under P&L debit side. So the assumption is, not the assumption, the closest facts from the question is, they are not taking input tax credit for that particular purchase. We don't know what type of purchase it is. Are you with me? So you can deduct because it is actually paid also. It is actually paid on or before due date of filing your return because in the April they have made the payment. Are you with me? April is before all the due dates, whether it is 31st July, whether it is 31st October, whether it is 30th November, April is before all the dates. So you can claim it as a deduction. Claim as deduction. But in this question, you don't have to do anything. Why? Already that GST is there as a part of rates and taxes. Already that GST is there as a part of rates and taxes. And hence they have already deducted it. It is deductible also. And hence you only have to write a note. What is that note? GST paid, allowed as a deduction, already debited to the P&L account, and hence no further adjustment required. GST debited in the P&L account, allowed as a deduction, or GST paid, allowed as a deduction. Since it is debited in the P&L account, no further adjustment required. Is that clear? That is also right. That is also right. But in that case also, whether they are adjusting it under deferred tax also, that GST will not directly come to the P&L. It may have an impact through the deferred tax account. That's it. They will not directly debit it in the P&L account. If they are yes, yes, that is also a possibility. Or you can create that as a GST paid, as a current asset also. Then whenever there you are collecting it from your customer, you can cross it off. Your liability, you are creating an asset. Say for example, you are purchasing something. At that time, you create a current asset, like a GST paid, all right, or GST or input tax credit account. Then when you are collecting it from your customer through the sales, you have to create the liability and you can cross off that asset and liability. That is the normal treatment if you are claiming input tax credit. You will never put it as a part of a P&L account. Imagine you are not claiming input tax credit, then it will form part of the purchase itself. The purchase cost includes GST also. If you are not claiming ITC. I'm talking about accounting entry. Don't ask me which section this is. Okay. Yep. So I hope that point is clear for you. Always go for the nearest assumption. Okay. Always go for in the exam, if the question says they are not taking input tax credit, then it is clear. There is no scope of any assumption. If they are saying they are taking input tax credit also, it is clear. They are not mentioning anything. Always go for the nearest assumption available. Yeah. So don't do anything. Yes. Excellent. So let's move on. What is next? Other expenses include 2,000 paid as donation to public charitable trust. It's actually a deductible item under 80G, but the question is asking us to compute what? PGBP profit. So you don't have to do anything. You have to disallow it because you have already claimed it under general expenses. While computing business profit, it is not allowed as a deduction. It is allowed as a deduction from your GTI, gross total income, under 80G. So for the time being, you can add it back. So add back donation to trust. Yeah, trust. And how much is the donation? 2,000, right? You have to add it back. Yes, under 80G, there are 4 categories. Category 1, without any ceiling limit, 100% deduction. Category 2, without any ceiling limit, 50% reduction. Category 3, 100% deduction subjected to ceiling limit, that is 10% of your adjusted total income. Category 4, 50% subjected to ceiling limit, that is 10% of adjusted total income. In YouTube, I have done a revision lectures for chapter 6A. You can actually check that, okay? In YouTube, I have done a revision lecture for the chapter 6A and you can actually check it off. It's actually old but still relevant. It's actually old. I think I've done it last year or something, but it's actually relevant because there is no much amendments. There is no amendments at all under chapter 6A, only a new addition, that is 80CCH subsection 2. There are no changes for the existing provision in chapter 6A that you can actually refer because I'm not planning to cover chapter 6A. I want TDS amendment. TDS amendment, there is only one section, that is 194BA. YouTube name, my name, CA Kurian, you can search. All right. So where were we? That public charitable trust. Now you have to have a analysis on your P&L account. Opening stock is there, no problem. Purchase is there, no problem. Gross profit is there, no problem. Salary is there, no problem. Rental rates already adjusted. Interest on loan, no problem. Depreciation already adjusted. Printing and stationery already adjusted. Postage and telegram, no problem. Loss on sale of shares, there is a problem. What is the problem? Under capital gain, not under PGBP. Are you with me? So what you need to do is, you need to add back loss on sale of shares. It is 8,100 and it should be under capital gains. They are not asking us to compute the total income, but still let's write it. Loss is 8,100. And there is one more problem. This loss can be set off only against income under capital gains, because capital gains head loss cannot be adjusted with any other head of income. So we don't have to do anything. You can simply carry forward it to the next year. How many years you can carry forward capital gains head loss? 8 years. Which is the section 74. Under section 74, it is the set off and carry forward of loss from the head capital gains. Are you with me? Are you with me? Then, what is next? Other general expenses, okay. Net profit we have taken. Sales is there. Closing stocks is there. Gross profit brought down is there. Income from UTI. What to do? Under IFOS, it should come under IFOS like dividend. So what to do? You need to less it under PGBP. UTI. What is UTI? Unit Trust of India. How much is income? 2,400. And you would add it under IFOS. 2,400. Bus. Can you help me with the PGBP profit? 1,30,900 is the income from PGBP. And you have capital gains loss 8,100 and IFOS 2,400. Click a picture or something if you want this. You have one more thing, not yet over. Question is not over. We have to compute the presumptive taxation. Even though we didn't study presumptive taxation, I'll solve it here, okay? Yeah. So tell me, what is presumptive taxation? What is presumptive taxation? There is a section called 44AD, presumptive taxation. What is presumptive taxation? See, normally you have to compute your income like this. That means from the income, you have to deduct all the expenses. If disallowance is there, you have to adjust that also. But there is one more provision that say an assessee can declare a percentage of his turnover as what? Profit. Assessee can declare a percentage of his. Are you all listening? Or are you guys thinking about the break? So listen, assessee can declare a percentage of his total turnover as his deemed profit. That provision is said to be what? Presumptive provision. So under section 44AD, you tell me how much is the turnover of this guy? Out of this, which is turnover? Which is turnover? Sales. That is 1 crore, 12 lakh, 11,500. So we will write down that 1 crore, 12 lakh, 11,500. This is total sales. 44AD says 8%. And they are also saying if the gross receipts are received either by way of account pay check, that means you are receiving money under either account pay check or account pay bank draft or ECS or through prescribed electronic modes, then what you can do? Instead of 8%, you show only 6%. So in this question, under the notes or somewhere they are saying, assume that the whole of the turnover received by account pay check or ECS. So what you can do? You can declare only 6%. And how much is 6% of this? 67 lakh. 6 lakh? 72,690. Now you tell me which is better. Show the original profit. That is better because that is only 1,30,900. If you go for presumptive taxation, your income is 6 times high. It is income, okay. Even though the heading is presumptive taxation, it is presumptive income. On this income, you have to apply the rate of tax to compute the tax liability. Are you all with me? Great. This is the final answer. So you have to say 1,30,900 is a better option. Why the amount of 23,200 taxable on 6%? 23,200. Okay. Why amount of? That is an expense, da. Okay, that is an expense. This is receipt. Turnover is receipt. That is payment. Both are different. Ali, that is receipt. Okay, receipt is by way of account paycheck. That is a payment, right? Okay. Yes. So, what shall we do now? What shall we do now? It's okay, Ali. It's okay, fine. Let's go for a break. Okay, let's go for a break. Go relax and come back at 4:50. 20 minutes break is there. Okay, go relax because we are about to start capital gains. Okay, so I want all of you to be relaxed. I know within 20 minutes you won't get relaxed, but that is the only time I can give you. Okay, so go relax and come back after 20 minutes. ATG, ATG Shakti, not ATC. It's under ATG.